My crypto journey started essentially in 2016. That's when I got really introduced to the space. Started to dabble a little bit with altcoins. Actually, the first cryptocurrency that I ended up purchasing was an altcoin that isn't around anymore. I was a lot younger at the time, and of course, I was riding that 2017 wave, and that's kind of what really hooked me into the space and kept my research journey and trading journey going. In about 2019, 2020, I worked at a point of sales development firm. So we were developing a blockchain based point of sale system for risky industries. And then I ended up taking a job at a digital asset hedge fund based out of Tampa, Florida. There, I was an analyst and then a portfolio manager. I worked there for about 4 years. Kind of within that space, that's kind of when I realized that there are a lot of inefficiencies, especially at that time.
Today we have the absolute pleasure to interview Jared, the founder of Equadyne, and we'll be talking about markets, trading, and the best strategies that they're implementing on their platform. Thank you so much for joining me.
Great to be here. Thank you very much for having me.
Can you tell me a bit more about your journey into crypto before we proceed to the more interesting part of this interview and discuss trading strategies and how to make money?
Absolutely. My crypto journey started essentially in 2016. That's when I got really introduced to the space. Started to dabble a little bit with altcoins. Actually, the first cryptocurrency that I ended up purchasing was an altcoin that isn't around anymore. I was a lot younger at the time, and of course, I was riding that 2017 wave, and that's kind of what really hooked me into the space and kept my research journey and trading journey going. In about 2019, 2020, I worked at a point of sales development firm. So we were developing a blockchain based point of sale system for risky industries. And then I ended up taking a job at a digital asset hedge fund based out of Tampa, Florida. There, I was an analyst and then a portfolio manager. I worked there for about 4 years. Kind of within that space, that's kind of when I realized that there are a lot of inefficiencies, especially at that time. Before the huge institutional wave came, everything from fund administrators to audits to just general client onboarding within a crypto fund. There was a lot of inefficiencies there. So that's what pretty much spearheaded, my decision to leave that firm and then start Equadyne Finance. So as I'm sure we'll kind of get into in a little bit, kind of into the weeds of Equadyne itself. The original idea came from working at that firm, and then before the development side at the blockchain point of sales company. Yeah, kind of all that experience that I had from dealing with clients, dealing with people actually trading myself and building algorithmic trading strategies. That's what spearheaded the big jump into developing our own DeFi platform.
And it sounds like you encountered an issue at the hedge fund and you wanted to find a solution to it. So, can you kind of run me through this process from the mind frame of a solution issue, like problem solution, and how did you manage to do that?
Yeah, well, for at the fund, you know, one of the main issues that I saw was just from our fund administrator. This was kind of earlier on in the space where there weren't a lot of crypto funds popping up. Definitely in the centralized space, this has since changed. But with all of the different NFTs and L1s and L2s that were popping up from a fund administration level, for a 506b fund, which we were, doing all the reporting in statements and actually aggregating all the data for the fund administrator was a difficult task, just because if you have the next version of Solana that pops up or an asset on a new product that hasn't yet been integrated, whether or not they have APIs or the fund administrator can actually access the data feeds from on chain, that caused a pretty big inefficiency for some of the assets that we were holding weren't actually being reported um, you know in real time to our investors, which we didn't like. So we ended up spending quite a bit of money to the fund administrators just so they can set up that infrastructure. And then also just from a client onboarding standpoint, there was a lot of issues that we were running into. Of course, being in the U.S., you have to be an accredited investor. In some states, you need to be a qualified investor. And for a lot of people at that time that didn't really understand crypto but wanted the exposure to it, those were kind of the hurdles that we had to overcome. I had a lot of friends that were coming to me saying, "Hey, I know you're in the crypto space. I don't know anything about it, but I really do think it's here to stay, and I want to get some exposure to it. Can I help? Can I invest in your fund?" And sadly, I would have to turn them away, and that didn't really sit right with me. So, given all the inefficiencies that we had when actually operating the fund and turning a bunch of people away, that's where I was like, okay, you know what? I'm sure we can go build something better. Everything being on chain and decentralized how it should be. All transactions are on the public ledger. Regardless of what chain you're operating on, the data's there. So the fund administrator shouldn't really be having these issues. Funds themselves shouldn't have to pay exorbitant amounts of fees just to have them build out the infrastructure. The first idea for Equadyne was just building a platform for hedge funds to release, actually build a decentralized liquidity pool, and then have everything decentralized on chain. So all the data is right there. And then if we're building it this way, because it's non-custodial, we can kind of expand access to, a lot of other unaccredited individuals, globally. For funds itself, we were based in Tampa. Most of our LPs were just based in the U.S. So, seeing all those problems and, it not sitting right with me that we were turning away a lot of people that wanted exposure to the new asset class, it was pretty much just, start solving some of these problems, talk to people that are actually, in the space managing money, and then just keep building. We've been building for almost 2.5 years now, and it's really just been a constant feedback loop of, onboarding private users, testing out our features and seeing what they want. And that's kind of just how I've gone about developing this platform. It's really just been constant communication with the actual users.
And on your website, you said that Equadyne substitutes confusion with confidence. Can you tell me a bit more about the platform and how do you manage to achieve this?
Yeah, I think it's kind of a good segue here from what I was just discussing. We really started off at building like a white label solution for these funds. So a way for them to create non-custodial liquidity pools, have liquidity providers come into the platform, deploy their capital, and essentially be like a large copy trading platform that the fund manager doesn't take custody of the assets that are invested in their pools, but they have pretty much the entirety of the DeFi ecosystem to work with. As we started, just continually adding more products, we realized what we were really creating was one of the largest aggregators in the DeFi space. So we're completely omni-chain capable. So whether or not you want to interact with Binance Smart Chain, Near, Solana, Ethereum, Avalanche, you name an L1, what we pretty much do is we strip down the UI of all these products that are building on those chains, rebuild them in our own platform, in our own ecosystem, and then allow any of the fund managers or personal trading accounts that we have on our platform to access all of this. So if you go onto our platform and you click on lending and borrowing, there'll be an actual just drop down tab of saying where do you actually want to pull that liquidity from, and it's a very long list of different platforms that you can actually lend or borrow. And for the general retail user, if it's kind of our opinion that if DeFi is going to continue to grow, it's the onboarding process that needs to get simplified. Right, a lot of people that are coming into DeFi, they're used to that centralized experience, whether or not that's just in traditional finance or in the blockchain space. It's really important for them to feel comfortable in what they're doing, and I talk about this all the time. But it seems to be whoever was the one that was spearheading a lot of these projects in early crypto. It's like we created our own different language. There's so much jargon in the space talking about wallets, private keys, managing those private keys, being an LP. I was talking to a couple of lawyers the other day, and they're like, can you explain an LP? In my head, that means, limited partnership. I'm like, no, that's our jargon for liquidity provider. And they're like, what in the world is that? So it's a lot of these little nuances within the crypto space that just honestly just confuse the individual, end user. If you haven't been in the space for a while, a lot of these terms and, concepts are going to be new. And that's kind of where we're seeing a shift back to centralized exchanges. Just because they do simplify it a little bit more than the DeFi products that are out there. So we're stripping all that away. I mean, we think that even from the wallet management and native tokens to pay gas fees is something that a lot of general retail investors are not going to want to have that headache. If you want to go trade on Binance, you're going to need their native token versus Ethereum, covering the gas fees for everything. It's not something that most people, if we want that wider grand adoption, most people aren't going to be doing. So on Equadyne, when you create your account, you can choose two different methods. Your current MetaMask wallet, your current Coinbase wallet, connect your ledger, or you can just sign up with one social email. When you're creating an account, you're creating an embedded smart contract wallet or an abstract account. So essentially, you're going to get access to all of these different chains. You can pay all the gas fees or transaction fees with the native Equine token in our ecosystem. Once you're in our ecosystem, you essentially don't need to leave. You can access all of these different products within our platform. Spot, futures, lending, borrowing, staking, farming. You name it. If it's in DeFi, there's a way for us to integrate it within our platform. And then we also have that functionality for users to find a vertical in their portfolio that they might be missing, right? Let's say someone wants to hold just BTC in their wallet, and someone out there, has created a public pool for, that's really good at, optimizing the yield for lending, borrowing, or staking for that Bitcoin itself. You can go find that manager, deploy your capital, and then you're off to the races of, filling that gap that you wish to fill. So that's kind of what we mean by, transitioning the confusion into confidence. We strip down all that jargon. It's one simple UI that accesses everything. You don't have to worry about the wallet management. You don't have to worry about the native tokens and a whole other plethora of stuff. And, with a lot of our built-in AI tools and strategy builders, it's kind of a great way for, maybe someone that's new into trading. It's a great way for them to learn. Everything is, there's walkthroughs for every part of our ecosystem that you can access.
And on the liquidity provider side, can you please elaborate on how do you incentivize people to provide liquidity, and how do you ensure that you have a large enough liquidity pool by a diverse number of people?
So the liquidity pools themselves on our platform are essentially like copy trading accounts. So they're not like providing liquidity into Curve or Radium or something like that. You're not being a liquidity provider in the sense that you're providing Trump token to USDC on Radium or Solana or whatever pool you're managing. All of the trades and transactions happen on these third party platforms. So if you're transacting Trump token, you might select that you want to trade on Radium, or some other platform and some other token. So Trump token has been all over my X feed, so that's kind of why I use that as an example. But so yeah, for the liquidity providers on our platform, it's more of like a decentralized liquidity pool or a decentralized hedge fund in the sense where there's a manager that's essentially directing where the funds go. It's all non-custodial. It's all based on smart contracts. So when an individual manager or just a personal trader, you don't need to necessarily open up your pool to the public. It can just be a pool that you've created yourself to kind of separate your different strategies that you run. So a good example is let's say I'm running a simple BTC RSI trading strategy. Within our platform, you can automate that entire thing. Just set simple rules. I'm buying BTC when it hits 20. I'm selling when it hits 80. And I can essentially automatically rebalance that strategy itself within all my different wallets in Equadyne. So I can have a rule set saying, hey, during let's say a 5% mean reverting range that we're seeing right now, I want 50% of my portfolio to be allocated to that specific strategy. At other times, I don't want anything. So it'll automatically move your capital into running that strategy or not. And let's say the other 50% is going to go to a BTC yield optimizer. So we're going to go lend out our BTC, and it's going to on a 24-hour basis, we're going to go check out the entire market and see where the best rates are, and it'll dynamically adjust where you're actually providing that liquidity. So again, I kind of got a little off track there, but for the liquidity providers, it's not so much that we're needing a certain amount of liquidity in the pools. That's basically up to the pool manager themselves to kind of utilize their network, raise funds, and get other LPs into their pool to manage.
Okay, and on the user side, it's comparatively easy to set up an account. You can do it simply with your email, and there is no need for private keys or manual transactions. But could you explain to me why would users be incentivized to do it in a way that, let's say, I'm a trader, um, I can place this bets myself. Obviously, it's a lot easier when it's automated. But could you also outline a few more benefits?
Yeah, absolutely. So, I mean, we kind of have like three customers on our platform, right? We've got the beginner investor that might say, hey, I'm not sure what I'm doing in the crypto space. My end goal is just to go find someone that knows what they're doing, that has been around for a while, has a proven track record that you can see on our platform. Um, and then we've got like the advanced trader or someone that's been in the crypto space that can they're totally fine placing their bets themselves. They know how to operate MetaMask, Coinbase Wallet, all these different L1s and L2s. They know what the products that they want to use. If they just want a more seamless, user interface and experience, just having one tab open, paying all gas fees with one token. You don't have to worry about having BNB, ETH, Near, Sol to cover the cost of all of this. They just want to automate a bunch of their strategies. That's something that they can do on Equadyne. And then we have the fund manager. That's someone that actually has a proven track record of running a strategy and wants to open it up to the public, and earn additional yield from doing so. So those are kind of our three main use cases for the abstract wallets and the single unified login through an email and having social recovery mechanisms. That's more for the beginner user. That's for our mission of expanding DeFi to the masses. Kind of what we were going back to earlier with, if DeFi really needs to expand, we need to simplify that onboarding experience. So that's kind of what's built for them. If you're already in crypto and you want to place your own bets and you just want that simplified user interface, log in with your MetaMask. You can have your own private key. You know, your traditional method of utilizing and accessing DeFi. That's not going to be any sort of issue. You would come to us just because you want to automate and simplify a lot of your day-to-day processes, or utilize some of our AI insights. Getting real-time data, automating that into one of your strategies that you have, or eventually becoming that fund manager and opening up your strategy to other people, and getting that performance fee.
Okay. And can you tell me a bit more about the investment strategies that people can develop? And I know that you enable them to do it without using any code and with the help of AI. Um, can you also outline some of the most profitable strategies and what are they focusing on at the moment? Like, I'm sure that you have seen some narratives emerge or certain trends that have emerged based on the data that you've collected from all those traders.
Yeah, it's actually been quite interesting. Of course, we're still kind of in our private beta for the public funds, right? We're still building out and finalizing a lot of these really cool features that we're building. But as far as the building strategies, it's really however you see best. There's really no like templates that we're creating for you. There are like, right, you can type in the little chat box and say, hey, I want to create that RSI Bitcoin strategy and I want to utilize Uniswap to do so. And these are my parameters. You just type that in, build it, deploy it, set it and forget. But we've seen some really cool adaptations of what people are doing. Everything from feeding in technical analysis, creating custom indicators through TradingView, feeding those alerts into our platform, and kind of building out some really cool things. Whether that's mean reverting strategies, trend following strategies. We've seen kind of a shift from that, especially in the current market dynamics. People pulling in fundamental data of actual on-chain activity of what's the actual revenue of Uniswap right now. When the Uniswap revenue drops 10%, sell my entire position across these different wallets that I have. It's really just within the eye of the beholder or the developer themselves of what they want to create. And the systems that we've created to really simplify this, right? Because I feel like a lot of people in crypto, they know a lot of it's just data, right? There's a whole plethora of data out there, with it on chain, off-chain information. There's a lot of data providers out there providing honestly too much information for one individual to comprehend and condense into actionable insights. So for our platform, we've got a nice drag and drop feature. You can just drag in, something. Hey, I want to pull in data from Uniswap on their 24-hour revenue. Set parameters of what these limits or thresholds actually do. So there's a lot of different options for individuals to play around with and see and backtest and what kind of strategy works. I'm not going to speak to specific strategies that we've seen that are working. Of course, that's their alpha and that's their edge, and it's not from our end we can't even see what their strategy actually has deployed. That's their proprietary trading strategy and not something that we have access to or would be willing to share. But as far as looking on our platform right now, people are kind of copying just what the market's doing. So there's this huge push for U.S. based tokens right now. Just because of the United States' current administration is putting a pretty big help to those. So we're seeing a lot of just different funds pop up of people handpicking different U.S. based funds and packaging that, essentially making like a synthetic ETF within our platform. So we're seeing a little bit of that, and some people have attached different trading metrics to that. When a token dips 5%, buy it. When it goes up 10%, sell it. Little things like that. But yeah, it really is kind of however you want to play around with fully automating, dragging and dropping different metrics and setting different parameters and thresholds. There's a whole lot you can do within that space within our ecosystem.
And you're currently operating on a private beta. Can you please outline the roadmap for me? What's next for you? And can you also touch upon your business model? How are you planning to make money?
Yeah, so the business model, it's pretty simple. With all of this crazy, white papers and roadmaps and different forms that we've seen, protocols make money. Ours is fairly simple. It's, when the trader makes money, Equadyne gets a cut. So if you're trading and you're placing your bets and you're losing, no harm, no foul. We take a small percentage of your profitable trades, very similar to like the rollbit model. And then, sorry, what was that first question?
It was about the roadmap. So what's next?
Yeah, so we're still, we're always going to be constantly developing. We're adding more features, adding new data points that people can automate within their strategy, adding more, and integrating more products. As more and more L1s and L2s pop up. As far as the public access, that'll be rolled out in April, along with our final liquidity event for our Equine public token sale.
And can you tell me a bit more about the public token sale? What's the purpose of your token? I know the ticker was EQN.
Mm-hmm. Yeah, the token itself is kind of the powerhouse of the entire system. It's paying for transaction fees through our paymaster accounts with all these different networks. So that kind of allows you to not have to worry about the various transaction fees across whichever chain you're actually operating on. And then for the strategy builders themselves, each kind of those data points that you're pulling in, for essentially getting API access paid with our token to kind of deploy that and run that 24/7. And then staking rewards for the token itself, incentives for providing liquidity into these pools, things of that nature.
And I'm sure that you're immersed within the trading ecosystem, and you mentioned that the Trump token is all over your Twitter right now. So I'd love to hear your take on tariffs and what do you think will happen, because they're expecting not as kind of strict tariffs to be announced on the 2nd of April. So what's your take on it, and what impact do you think you'll have on the market?
Yeah, this is something super interesting. So currently I run a digital asset hedge fund that is based in the U.S. So kind of generally for our strategies right now, I can only talk about how I'm interpreting the market. This is kind of when I generally take my foot off the gas for crypto. When the equities market is kind of leading, you see a lot of tokens out in the space kind of doing random things. And from what I've seen, the data kind of funnels a little too far outside of our risk parameters for what the actual price action is showing. Um, so I mean, tariffs themselves, they always provide a little bit of additional fear in the market just because no one really knows what's going to happen, and crypto is not immune to that. So right now for me personally, I'm just kind of seeing how it all unfolds. I do generally think though when there is a lot of fear in the market, you hear a lot of legacy traders say buy the blood in the market. Not financial advice, of course, but that's kind of something that I personally am looking at doing. It's really, I think it's being over exaggerated of kind of the consequences of the tariffs, and I think generally it's going to build a stronger marketplace. Of course, it's always going to be dynamic in the sense that everyone always says history doesn't repeat, it rhymes, kind of thing, and that's kind of the data points that I've been looking at. Especially with these tariffs, people generally over exaggerate kind of the outcome, and of course in the political landscape things are changing every day. I personally don't think that these tariffs are going to do anything but eventually help. Especially with the U.S. kind of the new administration wanting to be the powerhouse of the crypto space. Um, I think it'll be beneficial long term for the crypto market. And just generally in crypto, if you're thinking about why it was created and why it's here, especially if you're just looking at BTC, it is kind of just an insurance policy on failed monetary and fiscal policy. Wherever you live, whether it's the U.S. or outside of the U.S., it's your hedge on that. It's your hedge on just that failed policy, which I think people are starting to understand. Gold's kind of been ripping to all-time highs, and I think the institutional capital is kind of seeing that Bitcoin can be an even better store of value for them. The overall crypto market, that's going to have its ebbs and flows. A lot of the tokens out there are getting hurt. Some are doing very well, and that's just something that the individual investor should definitely just keep a close eye on. But don't get scared. Crypto's here to stay.
Yeah, and you mentioned the interest into Bitcoin, and the reason that people are looking into it is because of the terrible monetary policies that we have all over the world. And one of the reasons that I got into crypto is that, but also when I was like investing at the time, I was reading The Intelligent Investor, and obviously one of the main arguments that they make there is that you should just identify some good stocks and then place long bets on them and hold them for the next 20 years, and you outperform the majority of the traders. So do you think that it's still applicable when it comes to crypto? Because a lot of people are trying to extract some of this very useful theories that are applicable within the Web 2 trading world and essentially apply them within the Web 3 ecosystem. But it's not the same, because if you get lucky on one meme coin and you make 1000x on a good amount of money, then one trade could essentially make you an insane amount of money. And I don't think that you can ever do that within the Web 2 world. So yeah, just to bring you back to that question, do you think these theories and ideas are applicable for crypto?
I think they are. So to kind of go to your initial point on meme coins, if we look back in history, when people were first trading like penny stocks and things like that, a lot of that information was very similar to the new alts that are coming out. Not necessarily the memes. The memes kind of live in their own different realm of everyone knows this is a large game of hot potato. And if you're in early or you've done your research and say, hey, there's a huge marketing budget behind this project. There's a lot of interest in just this token that might be on a specific current trend. If you want to take that risk and that gamble, more power to you. There's nothing stopping you from getting that 1000x. I personally don't play in that realm. I'm rather risk averse. I know that's kind of counterintuitive given that, I'm in crypto and it is a risky asset class. But, kind of where I personally stay is just the well-known tokens that have, infrastructure that they're building out that is actually going to, propel DeFi to the next, you know, big game. So I mean, the the theories and principles from Web 2 trading definitely translate. It's You just probably have to look back a little bit further in time of how you're relating meme coins. I would relate that closer to the penny stocks or something like that. Um, there's always going to be a group of individuals that are fine taking the bets, taking those risky plays, trying to find their next 1,000, 10,000x. But as far as just buying and holding, if you're not living behind the screens and gathering as much data as you can and making actionable decisions on the data that you're getting, you probably are just best off buying a handful of assets and setting it and forgetting it. Generally that has always been the more profitable strategy. I think most people in the space have probably seen a chart here or then of looking at different hedge funds in the past in the Web 2 world that almost all of them don't beat the market. It's just not something. There is that select few that do know how to analyze the data a little bit better. They could be getting lucky, or they could actually have some edge in that market. For most people, that's not going to be you. But come over to Equadyne. We've got a lot of data points for you to gather, a lot of helpful tools for you to kind of find your edge and see where your strategy is best fit. But yeah, long answer to your question. I think the principles do translate. Again, history doesn't repeat; it rhymes. So I think the learning points that you can take from trading in Web 2, I definitely think it'll make you a better trader in crypto. Right now everything is kind of just amplified by 10x. The daily volatility swings that we get in the crypto market are huge. And I definitely think if you are someone that's just capturing that volatility, that could be your edge, right? If you've derived some sort of strategy that can capture those daily swings on various illiquid coins, I think that would be pretty beneficial to you. But if you're not living behind the screens, then at the end of the day, you might get burned a little bit. But again, those are just lessons that you need to learn for yourself.
I agree with this. And can you tell me a bit more about how do you believe that this bull run will play out? Because everyone was very enthusiastic about Trump winning the elections, and we expected Bitcoin to rally, but obviously it has retracted quite a lot. And when it was going down, and I think it touched 78,
Hmm.
everyone was like, "Oh my days, you'll be going down to 75," and now it's gaining traction and solidifying at this like 80 um, mark, and it's bouncing up. Everyone is getting excited. So, what's your thesis? I would love to know how are you positioning for it, but also how do you think that it'll play out? Because some people are arguing that the bull run, the 4 years bull run, is over. Other people think that we'll reach the 110 and then we'll retract down.
Yeah, I definitely don't think the bull run's over. Something that people seem to forget in this space is that 20 to 30% drawdowns in crypto is a normal day. Look at previous bull runs, on the 4 year cycle. We've seen a handful of them, and still, within a couple months, we're up, you know, an exorbitant amount. I don't think it's ever something to fear. It kind of goes back to, when there is fear in the market, that's generally the best time to buy. And I think that's what's happening now. And, I think with Trump coming in and all of the tariff fears and whatnot, that's definitely slowed down, people's, institutional capital and the general public's appetite for risk. And of course, crypto being a risky asset class, that's going to be one of the first places that people are pulling off exposure. I mean, as far as just the general outlook, I think it's going to be positive. I'm sure if you're on X, you've seen that chart of the money supply and kind of BTC having a 6 month lag from M2. Right now in the U.S., we've switched from QT to QE. Um, these are all just positive indicators for us that we're not done yet. Liquidity is coming back into the market. Institutional capital is here. We've got all these ETFs. People seem to have forgotten about this huge feat that we just accomplished of actual getting institutional adoption into this asset class. And I think where people are kind of going wrong a little bit is forgetting those little milestones that we've actually accomplished. 20 to 30%, like I said, that's a normal day in crypto. We've seen that in the past in bull markets. I don't think it's over. There's definitely those theories out there where we're just seeing an extended cycle or the super cycle, and things of that. From me personally, again, I don't think this one's over yet.
And wearing your hat of a hedge fund analyst, can you tell me a bit more about how hedge funds are thinking about risky assets and not just about crypto, but any other risky classes that they're allocating to, and try to outline their long-term thinking and their strategies when they're getting into those?
Yeah, I mean, it kind of depends on the fund itself. For the fund that I run, it's kind of just been a long conversation that we've had with our LPs. We have a very small network of individuals that are actually, providing capital into our fund. Most of them are, have a very high risk tolerance. So that's kind of how we've set up our outlook. But this is, individual conversations that we've had with our LPs, that are coming into our fund. So that's kind of how we direct capital. We are here to be, their risky entity of an investment, right? I mean, it's a crypto fund all in all. But as far as, when we're deploying capital, kind of alluded to this previously, when the equity market is kind of taking reins on, controlling crypto, that's when, I take my foot off the gas a little bit. We're a completely algorithmic trading fund. So, a lot of the signals that we get, they pretty much disappear. For our fund specifically, a lot of the data points and the way that our models are trained, there's not a lot of, TradFi data points being pulled in. So that's kind of why when the market's kind of doing something wonky and it's not really aligning with how our models are trained, that's kind of when, it gets outside of our risk tolerance. And right now we're kind of seeing that transition back into crypto, kind of diverging a little bit more, from the equity market as, tariff fears kind of subside a little bit. People are coming back into the marketplace. We're seeing ETF, inflows again. So as far as positioning, me personally for our fund, we have a very high risk tolerance. We're getting in early. We're not necessarily waiting for the political landscape to agree. We're trying to get ahead of that, and so right now our positioning is definitely, for a more bullish outlook in the next 1 to 2 years.
And are you also keeping an eye on the macro factors happening in the US and how unemployment and the Fed potentially cutting rates 2 times this year will have an impact on crypto and the broader industry?
Of course, yeah. I mean, that's kind of what runs the liquidity in our market is these rates and jobs, and all of these data points are something that the Fed looks at. So of course we're looking at that to kind of guesstimate what their decision is going to be when that liquidity is returning to the market, when institutional players and just the general retail market are going to be more hungry for that risk and where they're going back into risky assets. With bonds decreasing and the value add for those, people are turning back to risky assets, and that's something that we believe we're going to see into the future here. Going back to QT to QE, that transition generally props up risky asset classes. And also one thing, this isn't really data driven, so don't quote me on this, but I personally think, especially in the equities market and definitely in the crypto market, kind of seems we've been in this realm where fundamentals have kind of gotten out the window. We're seeing a huge influx of just the general retail traders, meme traders, people on Reddit, Wall Street bets kind of running the market, whether or not, the company itself is actually sound. So that's definitely something for people to be cautious of. So I would advise, most people to look at the data. If you're fine taking those risky bets on a whim, go for it. And this goes back to, the meme traders, and should you transition the theories from traditional markets to crypto, and bet on the meme coin. That's really your decision. To me, those are gambles, and I personally don't take part in them, but nothing stopping you from doing it. And I think just look at the data, look at what the Fed's doing, look at other countries, look at the overall global landscape, because people, you have to remember that yes, the U.S. is a huge player in this space, but Bitcoin itself is borderless. It's not just the U.S. market that's making moves and bringing the adoption. It is one of the, if not the largest player in moving that liquidity to this asset class. But we're not the only ones. There's a lot of data points that you need to be considering, and a lot of different geopolitical factors that come into it.
And how do you think this cycle will play out? I guess I asked you earlier on, but would you feel confident or comfortable assigning numbers to it? As in, when do you think crypto will hit certain milestones, and what do you think is your target price for this cycle?
Yeah, I generally don't set targets, because we are a more algorithmic and data driven fund. Setting targets mentally, I try to avoid, simply because that creates a very strong bias for me. I'm looking at more at just the raw data points of what the overall market is doing, what's the sentiment of the market, you know what does the actual TA look like, what are the fundamentals looking like, and I found that when I'm setting mental price targets, I kind of find myself biasing that, oh, generally I would look at this as kind of like a local top, within the marketplace, or a local bottom, but then I find I don't actually have the data points to back that up. So I generally avoid it. I What I do is more so look at on a time frame basis. As we consolidate all of our data and kind of do our analysis, we're kind of just guesstimating on the time frame that local tops or local bottoms, or macro tops and bottoms may occur. And right now for us, that's kind of looking Q3 of 2026.
Okay, that's interesting, and I really want to hear your take on why Ethereum is underperforming this cycle, because I read a news story yesterday that the essentially the supply on centralized exchanges is at its 10 years low, and um, people are not holding Ethereum on centralized exchanges. And obviously, this could be interpreted in many different ways, but my reading of it is that essentially people that are not Web3 natives or not as deep in the ecosystem are investing into Ethereum, because people that are holding their money on centralized exchanges, my take is that they're most likely people that came to the crypto industry last year, or they don't care about their security as much.
Mm-hmm.
So newcomers, I would say, to an extent. Could you just tell me why do you think that's happening, and overall why Ethereum is underperforming this cycle?
Yeah, I mean, to kind of touch on the point of seeing, the reserves being at an all-time low. I mean, I look at that as a positive. That if people are moving capital off centralized exchanges, it's going to self-custodied wallets, and that's kind of the first step that you need to make, to engage in DeFi activities. DeFi is a whole, it's a wild west right now. There's not a lot of options that you get on these centralized venues. So I think if people are actually removing their ETH from, Coinbase or Binance or what have you to self-custodied wallets, that's their first step into, what is this DeFi ecosystem? What can I do here? And I'm going to start playing around with it. So I think for the overall DeFi space, that's pretty positive, and that's definitely very valuable for platforms like Equadyne. Just seeing that the overall growth of DeFi would be very good. But I mean, as far as the underperforming, that would be a whole different video in itself. I have definitely a lot of thoughts on ETH, especially from the ETH Foundation, um, just their general development of what they're doing, the staking, the rewards for the validators, and then L2s popping up, kind of just eating up all of the rewards. The staking rates have been dropping, and what's stopping just a bunch of L2s popping up? Like if we're looking at Base, right? There's been a lot of transaction volume on Base, and most of those fees are staying within the Base ecosystem and not trickling down to ETH. I think they're going to have to make a lot of adjustments just with how they're running their model. Um, so yeah, I mean, there's a lot of different things that I can say about why we're seeing that underperformance. But ETH in itself as an ecosystem, it's the first mover, right? It's got the most TVL, it's got the most activity, but something that we need to look at is it's super expensive to operate on ETH versus Sol or Binance Smart Chain or Near or any of the L2s that are out there. For the general retail user that's going to transact a couple $100, you might be trading perps or you might be lending, staking, or what have you. It's a pretty good chunk of transaction fees just to do that. If you go to Sol, you might be paying a couple cents, and if you're paying $10 to move your USDC off Coinbase to your wallet, and then approving a contract on Aave, you're going to be spending depending on the time of day, it might be 10-15 bucks. And if you're only moving around $100, that's already 15% of your total worth of on-chain portfolio value. That's, I think, where we're kind of seeing the problems right now is we've kind of reached the upper limit of the whales that got into ETH early, have enough ETH to actually cover these payments, and people are moving away from ETH to just cheaper networks, and ones that have caught up with product offerings and yield and TVL. So yeah, I think there's a lot of things going on. I do think ETH's here to stay. It's not going anywhere. Again, they had that first mover advantage of smart contract development and products. But I think we are going to see some big changes from the foundation itself. Kind of just they need to fix the onboarding issue and getting people to actually use their network, and if they might just go the security layer and have L2s be where people actually operate on, but they need to figure out a way to have those fees actually trickle down back to the ETH network itself.
I want to talk a little bit about AI and how the entire trading and investing ecosystem will change because of AI and blockchain and the convergence between these two. And I think you're tapping into it because you essentially enable people to develop their trading models with the help of AI, but you also enable them to collect data points on the blockchain. So, would you feel comfortable to make a prediction on how things will change? Because I believe that there will be a big change in the entire, let's say, trading, investing ecosystem and environment, industry. That's the word I was looking for. So yeah, what do you think he'll be?
It's definitely going to change. I mean, even right now, the ability for people to just synthesize data, or using an LLM to just read a 700-page document and spit out its opinions almost. The one thing that people need to remember is that it's just a prediction. The way that these LLMs work, right? It's just inferring the next word, and it's been trained on all these different data points of information that's already out there. We're now kind of seeing more intelligent versions of AI that can actually do its own processing and make its own opinions. It's not quite human smart yet in that sense, where it's digesting data and inferring what that data actually means on a longer term basis, stepping away from what the information it's been trained on. And it really comes down to if you give it bad data, you're getting a bad output. So that's something that we take very seriously with Equadyne. All the data points that we provide to individuals that are building these automated strategies, you need to make sure that you have good, clean data. And I think if you're just tossing some data points into ChatGPT or something like that and telling it to go make a strategy, I would assume 9 out of 10 times it's going to spit out some garbage, especially if you're doing like an automated strategy. If you're telling it to go do the simple 30-70 RSI trading strategy, it can probably develop that for you. And right, you can open up any sort of code editor, paste that in, type in your API keys to connect to whatever exchange you're using. It can make it happen. You can use some public libraries that are on GitHub to kind of do your back testing. If you want anything more sophisticated than that, it's just not going to work. Um, and you'd get to this point where having a profitable trading strategy is about finding that edge in the market. If you have everyone typing in a very similar prompt onto ChatGPT saying, I want to do this, and that's pretty much what everyone else is doing, all of those models are going to look the same. That edge is going to diminish almost overnight. If we do work in an efficient market, you can probably assume that a good amount of traders out there have asked the same prompt to make a very similar strategy to consolidate all these data points of on-chain activity and go make an inference machine that can spit out signals of when to buy and sell Bitcoin. All of those models are going to look the same. That edge is going to decrease. You're going to have some more original strategy out there that kind of utilizes the ChatGPT's version of the strategy to essentially steal all your alpha. So I think that the game is going to change, especially just the way for people to learn how to do these kinds of things. I think that's where the value is. Being able to teach yourself Python and go debug, putting it into Claude or whatever LLM you're utilizing. I think that's kind of where the learning curve decreased a lot, and I think that's super exciting, right? We're just gonna we're gonna have a lot more intelligent individuals that are learning on their own and using the help of AI to do so. But at the end of the day, I think it still comes down to you need to know what you're doing, and you need that original thought to find the edge in the market. But yeah, I'm very excited to see where we go. I think a lot of things are going to be way simpler for individuals to do. We've seen that already. But yeah, it's going to be an exciting time.
And do you think the skill set required to be a successful trader or investor will change? And what do you think will be the essential kind of skills that you would need? And also, I'm just now thinking about the entire education system and whether that will follow, because we're talking about AI and crypto and how people can utilize this technology to help them refine their strategies. And I'm not sure that kids at universities or even college are currently learning how to implement that. And that will be a big problem, because the gap between people that are currently doing it and what they're teaching you at school will significantly increase.
Yeah, I definitely think it's important for every individual to familiarize themselves with AI. It's definitely a very good tool to have in your tool belt. I think it definitely should be taught how to utilize it. Prompt engineering, what models are best for what kind of information that you're trying to gather. And we're seeing new models pop up from ChatGPT, Anthropic, Grok, Gemini, different models that they're all fighting for the kind of the best results uh, in different areas. It's definitely something that universities and colleges, and just even starting earlier on, middle school, of people should be able to learn the best way to use this. But I also think there is some moral aspect too that people should be learning of. If you're just gonna submit your homework assignment, type it into Grok, then you're not learning, and that's one of the biggest things that I am concerned about moving forward. Um, you know, if you're utilizing it in a way to just kind of spit out whatever answer, and you're not really digesting it, and you're not utilizing it as a tool to learn, I think that's kind of where we get pretty scary, right? Because again, like all of these LLMs are just trained on information that was already out there. So I think for a little bit we might see a decline in basically original thought. If the new generation is just utilizing the same information over and over and over again, in not really digesting what it's putting out and making their own critical thinking. I think that gets us to a pretty scary point in time. Um, so I think from that aspect, I think it is important for everyone to just learn how to use it, but learn the right ways to use it. It's a very good tool. It shouldn't be the answer to all your problems. I think if you're not sitting there with the fine tooth comb, seeing if the response is actually accurate, and it's something that you personally agree with, or you've done your own digging, and you haven't found any contradicting points. Um, I think that could get pretty scary.
Thanks. And one final question: how can people submit their interest in Equadyne? Because I've tried to do it, but it's not open to the public yet. Can you
Hmm.
just tell me what's the process of anyone doing that?
Yeah, go to our website, equidine.finance. The easiest way right now to get access is joining our Telegram. Kind of just send a message saying, hey, you'd like access to the beta, and we'd be happy to kind of work with you and see if that's a good fit for you to join now. But again, our public launch is coming right around the corner in April. So if you do kind of want to get a head start on getting access to the features, join our Telegram. That would be the best place for you.
Thanks. Thanks for your time and illuminating some interesting things about the market and how investors think.
Yeah, thanks for having us. Take care.